the gold and the silver bugs were this generation of people, and that the Bitcoin and kind of some of these newer technological things that we've achieved now, like the cryptocurrencies, that was another group, and they could never really understand each other. This situation kind of brought them together, and if they really work together, I think that they could achieve a much higher price target on silver and really, come back up to these $30, $40, $50 plus levels.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update, and back with us today is Phil Strieble from Blue Line Futures. Bill, thank you so much for joining us today.
Yeah, thanks for having me.
Definitely. Well, it's a crazy day today and a really crazy weekend. We've seen this Reddit frenzy talking about doing the short squeeze on silver. What is your take on what's happened? It seems just like a roller coaster ride. We've seen silver up 10%. Now it's down a bit, but it's just a roller coaster right now.
Yeah, and rewind, kind of the way I'm interpreting it is that it was a group of individuals that had formed and massed this army that was really fueled by the Bitcoin, the cryptocurrency, Tesla. Seemed like those were some of their core portfolio holdings that have kind of run their course and hit these capitulation points, especially with, Tesla and Bitcoin up at 40,000. They've come back down. And then it seemed like this group had kind of started to look and exploit other opportunities, and they weren't going to go out and all of a sudden start buying blue chips and FANGs at 52-week highs. That doesn't give them that same kind of feeling that they had on that first rise up. So they targeted high beta, high short interest stocks that were heavily short by many of these funds in concentrated positions. And that's really how you saw that AMC, GameStop, and those other individual stocks all take off, create this, massive news event. And now they've rolled over to silver. And you could see over the weekend, they really went aggressively buying as much physical as they could. And now they're targeting some of the junior miners in the silver futures contract.
Now, last time we had you on, you were talking about a disconnect was going to be coming for gold and silver. Now, I have to be honest, I was a bit skeptical. I was thinking, silver could move maybe faster than gold, but like an actual disconnect, that seems like what we're seeing right now. Gold isn't up that much. Silver is up significantly in the last, 4 or 5 days.
Yeah, and this trend has been going on for a while, especially since that March high on the gold-silver ratio. That was the peak right around 111. It's continuing to break down. It's had some consolidation points. In those consolidation ranges, that's when they tend to move together. And you could always measure and map the correlation matrix between the two, and also the dollar and other commodities against it. But if you look at gold, gold is merely just a currency, and it's just a store of value. Central banks hold it, where silver, on the other hand, is a rare commodity. Remember, it's just a tailing from copper or other minerals that are mined, so there's not that much of it out there. The supply of it has been pretty stagnant for a decade, and the demand uses continue to go up, everything from solar to electrical needs. And those, as that expands, you're going to see a supply crunch on it. This is physically coming out of the mines, not the other investment demand. And people got to realize they're buying a commodity. And I always said, one day silver's going to get in that race car and take off, and gold's going to be running behind, and it's not going to be able to catch up.
And with respect to what's happening right now with this, people piling into silver, a lot of people saying, that it's kind of fueled by this Reddit feed, this desire to have this short squeeze and all of that. Where do you see silver heading with all of this energy? Because if we look at GameStop or some of these other stocks, they just went wild, tenfold gains or things like that. Do you see that happening for silver?
I mean, to come out with like a specific price target, I think would be kind of, it would be inappropriate because of the fact that you look at how GameStop had gone up, to over $500 a share. I mean, no one in their wildest dreams, even if the company was ran absolutely perfectly, I don't know if it would be able to achieve that kind of price level. So momentum and rate of change is going to really come into play, and the trajectory of it, how much firepower is behind it. You know what I do like, and I just thought about this now, is that it seemed like the the gold and the silver bugs were this generation of people, and that the Bitcoin and kind of some of these newer technological, just things that we've achieved now, like the cryptocurrencies, that was another group, and they could never really understand each other. And this situation kind of brought them together. And if they really work together, I think that they could achieve a much higher price target on silver and really, come back up to these $30, $40, $50 plus levels.
Do you think it would stay there, or would it just be like a momentary spike?
That would be another issue. So it would have to really depend on, then it would go back down to the supply demand. Like is like the capacity utilization of these miners. Are they able to bring on new supply at a rate that would be able to match this new increased demand? They haven't been able to do it, in the last year by any means. And that's what really started some of these rallies, because of the fact of COVID, and they had social distancing in the mining. And we saw this in a lot of different commodities, like lumber futures, for instance, hit like an all-time high. It went to $1,000 because they just weren't producing it. There were tariffs, couldn't import it, all these other things. If they were able to match it, then the price would most likely sell off. But if there's a physical supply shortage for a long enough period of time, prices could hang out there, and all of a sudden there could be an underlying buying behind it to help support those prices higher. So anything's possible, but we're getting some pretty volatile moves here today in the market.
And what is your take on the supply issues? Because I know for physical silver, like the bars and rounds and coins, retailers, across the country are just being wiped clean right now. Yeah, I guess what is your perspective on the retail issue right now?
So generally on the retail issue, we always see the biggest premium on the individual coins. Then it goes into the 10 ounce and then the 100 ounce. So the premiums are going to be larger on the coins because they're smaller denominated, so they can have larger profit margins. When you start buying like these larger bars, that's when you're able to negotiate like a bid offer spread. So in theory, somebody right now, if they can't get their hands on those smaller amounts, well, that's because people with lower barrier to entry to get exposure in a silver market, like say if someone only had $1,000 and they bought, all the, coins that they could, well, they're going to be paying excessive premium. But realistically, if someone had, $140,000, they could open up a futures trading account by the front month and ask to request for delivery, and the exchange will prepare a loadout, and they'll have it shipped to whatever institution that they want it to be shipped to via armored car service. So there is no actual physical supply squeeze on the 5,000 ounce contracts. You got to constantly look at the CME, and the data that they put out on those bars. But the larger contracts, you could buy those all day right now.
There's a lot of talk about, with respect to those contracts, like fear that it would have to be settled in cash because there wouldn't be enough supply. Do you see that as a possibility?
So I've seen it happen in the past on other exchanges, and it's happened in many different products. All the way down to like potatoes and cheese and things like that. We've seen these commodities go into where it's called like a force majeure. We don't anticipate anything like that, and I'm sure that the exchange is going to work on being able to accommodate people that are requesting these loadouts. It's more of a difficult process. I really think that the smart investor buys the contract, takes delivery of it, maintains it in the warehouse, gets that thrust up, sells the futures contract, and delivers against it. I think that that's the most effective way to do it, rather than preparing the loadout, because once you do the loadout, it takes you're going to have some problems trying to unload. These bars are pretty bulky. They're like 65 pounds for each bar. So it's going to take definitely some work and some heavy lifting once you do a loadout like that on that size.
With respect to other areas in the silver market, not just the physical metal, but also like the stocks, what is your perspective on what's been happening to them? It seems like people are buying them as well as the physical metal.
Yeah, there was a frenzy in a lot of the miners. You do have to always remember when you're dealing with a miner, you want to look at, what countries are they mining in, what metals are they mining, just because they, indicate they're a silver miner, but they might be also mining gold and, rhodium and other metals out there. So you really got to watch what you're doing when you get involved with these miners. And miners do have, some headwinds. Labor costs and energy costs are always their two biggest ones, as well as, rising interest expenses. So there's a lot behind it. It's not always just a pure price play. There's a lot of other components to it. So you really want to be selectful and mindful for the ones that you're going to speculate in, because not all mines are profitable by any means whatsoever. I always believe that your best way of doing it is to go with, the physical first, the futures second, third would be a proxy to the futures like an ETF, and then fourth would be a miner, unless it's one of those true leaders out there. Then those have been time-tested, stable companies that have a good process of developing, bringing the product up. So I'm not saying all of them are bad. There's quite a few good ones out there. You just got to watch out, especially when you get into like the penny ones.
At what price for the physical metal are you still a buyer right now?
Me personally, I'd fulfilled my own needs when silver was sub $15. So I'm comfortable with everything that I have purchased for the rest of my life. But for each individual, it's unique, because there were people this morning that were panicking, fear of missing out, that wanted to buy it up at the top, and then there are other individuals that are willing to sell their contracts up there and take profits. So that comes down to each individual and what percent of their portfolio. Realistically, silver is a commodity. You shouldn't have more than 4% of your total, net worth tied into it. Gold's a currency, so you can ramp it up to about 10% because it's a bit more stable. So you're going to see this disconnect continue to go on, and volatility is definitely going to be something that's here to stay.
So would you say that gold is the safer play right now, or what is your perspective?
Well, they have two different. Silver's high short interest, high beta. Gold is weighed down right now by rising yields. If you look at the 2-year yield, it's been flat. That's what the central bank, the Fed, they really wrap themselves around. And the 10-year yield has continued to climb as we come out of COVID and the economy starts to expand. So we've broken through 1%. So you have a steepening yield curve, and that's what's weighed in on gold prices. And that should reaffirm that disconnect.
Definitely. So I guess going into the rest of 2021, do you have any price targets, or where do you see both metals going?
So gold should perform better in the second half of 2021 because economic data, so we're going to have rampant inflation going into the first half and rampant growth. All the economic data should improve at an alarming rate. That's why there is big time inflation in the market. It's in other products. It's in live cattle. It's in corn, soybeans, lumber. All these products have gone up dramatically. Gold has not, because I told you, because of the rising steepening yield curve. The yield curve will start to flatten the second half. So that's when you want to be long gold, is in the back half of 2021. You'd want to be long silver, crude oil. Those are first half 2021 plays.
All right. Well, Phil Strieble, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
No, you can follow us. You go to www.bluelinefutures.com. You could also follow us on Twitter at BlueLineFutures. And, you could always get better at doing things. You could always have a process of doing it. Really write down and come up with a battle plan and how you're going to try and take advantage of some of these moves. Don't just blindly go all in on your portfolio. It doesn't need to be that kind of thing. You can build a nice diversified portfolio and have a comfortable amount long these gold, long these silvers. That way you don't have these fear of missing out type of thoughts when these price actions come. Sell some when they come out to the top end of these ranges, and buy at the bottom end of the ranges. That's the way I've always lived by.
All right. Once again, Phil, thank you so much for your time today, and God bless.
Thank you.